What's up, everybody? Alex, the day trading champ. If you're looking for a trade to take starting tomorrow when you wake up and make some money off of it, guys, we've got a pretty good trading idea planned. Okay, so it's going to be over LII earnings, which, if you don't know, is Lennox International reporting tomorrow straight away in the morning. Okay, so this could be a very good start to the week, and I've got a trading conclusion. We've got statistical data, analysis, and everything to go with exactly how we plan to trade this earnings. So with that being said, guys, I'll tell you right now that my confidence to win tomorrow on this trade is probably 78%, right? That's not an actual statistic. That's just what I'm thinking, what I'm giving myself, a rating on my confidence going into this trade, okay? So at the end of the day, take all the facts, all the stats, and everything we're going to go over here, and then decide for yourself, do you want to take this trade? Is it a strong enough case for you to want to take it tomorrow? Okay, so with that being said, I have the presentation, everything you should know and consider going into tomorrow, and then obviously you'll have to decide, do you want to take this trade? Okay, so with that being said, let's give you all the data, everything you need to know so you can come to that conclusion for yourself. Okay, so here's all the earnings, the last 10 earnings for this stock, okay, and no one wants to look at that. Okay, so I make it easier to digest, and we're going to go over exactly how it reacts after all these earnings. Okay, so here back in July 20th, 2020, the last time we reported earnings, we beat earnings, yet the stock gaps down, as you can see here. Okay, so gaps down, and then straight away it soars higher for the rest of the day, finishes higher, recovers all that losses and the gap down. Okay, so finishes up 2.79%, daily trading range of 31 points. Now, 31 points is a pretty ridiculous trading range. That's, even higher than Tesla. Tesla has a trading range of about 20, I believe, after earnings. Okay, so this is why we picked this stock, is because it does have a history of having very large daily trading range. Okay, so your best entry here would have been calls at the dip. Now, guys, let me tell you straight away, this is a very hard stock to trade. Okay, and that's why we're gonna go through all these examples so you're not shocked at how this thing can react sometimes. And then by the end of this video, we're gonna have a very good conclusion of how you should actually trade it. Okay, so it might seem like all over the place right now, as in what the reactions are, but trust me, by the end of this video, we do have the stats and a true conclusion of exactly how we should trade it. Okay, so here back in April 20th. The second last time we released earnings, we had a hard miss on earnings. Okay, so you can see here we gap down. Okay, and then your best entry would have been to short this bounce, and you would have got 20 points on the short side there. Okay, so daily trading range of 20 from top to bottom, 188 down to 168. That's 20 points you could have shorted there. Okay, so it actually kept dropping 2 days after this, but not by much. Okay, and so that's a reaction there where when you miss earnings, it gaps down and continues lower. Okay. Next reaction we have here is when they barely beat earnings, but they had bad guidance, and yet the stock still actually moves up on bad guidance and barely beating earnings. Okay, so this was a very weird reaction. You can see here daily trading range 17 points. It moves up 11.7 points. Okay, but a key takeaway we can get from here is that it was actually selling off into earnings, and there wasn't much room lower for the stock. Okay, so even though it barely beat earnings, it still does go a decent bit higher. Okay, so best entry here would have been calls at the dip or puts on that bounce. So like I said, it's a very weird stock to trade. There's multiple ways to trade it, but we'll have the best conclusion by the end of all these reactions. Okay, so 10/21/2019, we miss earnings just barely with great guidance, right? Keyword great guidance, yet the stock still drops. Okay, so key takeaway here would be that you see this thing actually running up into earnings, and it still drops after. Okay, so daily trading range of 18 points. Once again, that's a lot of meat. That's a lot of shorting points you could get if you time your entry right, and that's a lot of money to be made. Once again, that's why we picked this stock to try and trade for tomorrow. Okay, so best entry here, short the bounce or calls on the dip. Okay, because this thing actually finishes pretty close to where it closed the previous day. Okay, so once again, mixed reactions. We're getting all types of reactions here, and it's not very clear how should we trade it yet. Okay, but like I said, by the end of this video, you're going to know exactly what the best probability is for us. Okay, so 7/22/2019, we miss earnings with good guidance. Okay, so we just had that example where we miss earnings and with good guidance. Okay, once again, we miss earnings with good guidance. What happens? The stock drops, it gaps down, and continues lower for a week. Okay, so you can see here daily trading range of by the time it opens, you only have 9 points on the bone. Okay, so this is because it gapped down already. Okay, and then your best entry here would have been shorting that bounce up. Okay, so if we know if it gaps down here, just like it did in both of these instances, if it gaps down, you want to short that bounce. Okay, so here it gapped down. If you would have shorted that bounce, you would have got 18 points on that, on the bone, right? Meat on the bone we're talking about here. Okay, and so same here, you would only got 9 points on that bounce once you shorted it back to the downside. Obviously, if you would have held for the week after, you would have got more meat on the bone there, but we're most likely not going to hold these for a week, so let's just say you only got 9 points to short there. Okay, so next example, April 22nd, 2019, we beat earnings, but the stock still drops. Okay, and you'll see that here we move down, finish only negative 295 points for the day. Daily trading range of 10 points. Okay, so if you would have bought calls actually, from the bottom up, you would have got 10 points on the call side. Okay, so that's an example of when you beat earnings, yet the thing's still gapping down. You should actually be very hesitant to short it, and most likely you should be buying calls if the thing is gapping down after beating earnings. We had another example where it actually completely recovered the gains. I don't know if you remember, that was the very first example. Okay, so best entry here, calls at the open or on the dip. Okay, so next example, we barely miss earnings, okay, here on the 5th, and yet the stock still goes up. Okay, so that's a very weird example as well. Okay, so once again, like I said, it's very hard to draw conclusions so far. We're just going to go ahead and get into the next example. All right, 10/22, 2018, we miss earnings. What happens? Okay, we move up, we finish higher by a point and 74, or 1.74 points. Daily trading range of 19 points, right? If you would have gotten at the bottom here, you would have actually bought calls, you would have got 19 points, and then actually this thing continues higher. Okay, but key factor here, this thing was trading at 222 here. It's not in the chart, but this thing just sold off from 220 all the way down to 172.5, where there's just no more room lower. Okay, so they were anticipating bad earnings, and it was selling off going into earnings. So once the earnings came in, it was kind of already priced in. The stock couldn't move lower, and that's how you know to buy calls there. Okay, so best entry here, calls at the dip. And that the key point is that selling off going in earnings. Now you have to realize here, once we go into the chart here, you'll realize we're not selling off going into earnings. So these examples where we're selling off going into earnings aren't that important, because it doesn't really have to do with our current scenario, our current circumstances. Okay, we're actually rising up in earnings. So what's going to be more important is looking at the cases where we're actually rising up in earnings, which we'll have right here. Okay, so we beat earnings, right? Obviously, they're buying up the shares in anticipation of beating earnings. Okay, and after beating earnings, the stock still drops here on the 23rd, as you can see. All right, down from 212.5 all the way down to 200 in one day. All right, so daily trading range of 14 points. Best entry, that's a mistake, guys. It's not calls at the dip. It's shorting the bounce here. Right, so the stock opens here. Okay, it bounces just a tiny bit. That's your absolute best entry for the day. Drops all the way down to 200. Okay, so very nice example of beating earnings, but it's so priced in that it moves a little higher, right? Gaps up, but actually ends lower for the day, continues lower because of that run up in earnings, because of the anticipation of good earnings, that once it happens, it's no surprise, it's not enough to push them higher at this point. Okay, so that's a good example of what might actually happen here tomorrow. Next example, we beat earnings, okay, and the stock bounces here just barely, okay, only up $1.37 by the end of the day. Daily trading range of 8 points if you would have shorted the bounce. Okay, not something you want to trade there. This is just too unclear. What would the strategy be here? Okay, so we're going to skip past that. Once again, it doesn't really have any correlation to the current conditions of the stock. Okay, so now let's start putting this together. Okay, after all those examples, I know you weren't keeping count, but don't worry, I was. Okay, so 5 out of those 10 times when Lennox actually beat earnings, even when they were beating earnings, 3 out of the 5 times it dropped after beating earnings, okay? And then 5 out of the 10 times when Lennox missed earnings, 3 out of those 5 times it drops, okay? So you're seeing a sort of bias to actually dropping post earnings for Lennox. Okay, so 6 out of the last 10 reports has dropped, and I know it doesn't seem like a crazy percentage, right? It's only 60% of the time the stock has dropped, but it's about applying this, small bias to dropping, but actually applying it to the conditions we have right now on the stock. Okay, so let's match the current day scenario, right, where the stock is pretty much almost at all-time highs, and let's compare that to an example that's most similar in the past. Okay, so here is what we have right now heading into earnings. This is the stock right now today, okay? And then here's another example of where you actually seeing it run up, all right? This looks very similar. You see this little V going into earnings, okay? You see it run up into earnings, and then what happens? It drops at its topping levels, which is exactly what we have here today, is Lennox at its topping levels, pretty much at its all-time highs, okay? So the conclusion of how we can make money trading LII earnings tomorrow. All right, due to the market conditions, due to the past, due to how this thing trades, due to the fact that it has a bias to dropping even when it beats earnings, and most likely it's going to beat earnings tomorrow, okay, we can assume that because it's going to beat earnings, right, hopefully it gaps up, okay, and when it gaps up we know to short it, okay, because at that point it's going to be priced in and it's not going to be able to move higher. Okay, so one more important point I think we should bring up here is that Lennox is an air conditioning, utility type stock, okay? And when you look at XLU, the utility sector, okay, you can see here that Lennox is actually one of the best stocks in this sector, in this industry, okay? You can see here it's ranked third on Zacks.com, okay? But what you'll notice here on XLU, on a weekly chart, you look at the trend here, it's at the top end of its range, it's been on a complete tear, and to completely, continue higher here at this point would not be the most likely outcome, right? Surging this high, this fast, you would expect some kind of pullback, something to bring us back in a trend here, okay? So you would see this is the top end of that trend, this is that bottom end of the trend. So when you got the earnings as that last bit of catalyst to push the stock higher, you know that by the time that earnings is over, that, the gas is going to be out, right? There's not going to be any gas left in the tank for the stock to continue higher. Okay, so overall, this sector is very weak, but LII is one of the strongest stocks in that sector, okay? But it just makes sense that when you have a stock that is in a very weak sector, and that sector is at the top end of its range, very unlikely to actually continue higher at this point, okay, then it would make sense for LII to not be able to continue higher at this pace. Okay, so although it can be great earnings, although the stock might be great and a very strong stock in its sector, it would seem that now would be a time for a pullback, and that would be perfect at a time of deflation for the stock after its earnings. Okay, so conclusion here, obviously we went over that, was to most likely short the bounce on the stock. So let's go over the two charts again that actually are very similar to our scenario here. Okay, so here you see it runs up into earnings. You want to short the bounce, right? So it gaps up, you short the bounce, okay? This is our strategy if it gaps up tomorrow after beating earnings, okay? On the other hand, we saw through these charts and reactions over the last 10 earnings that if it actually gaps down, it has a very high probability to continue lower if it missed earnings, okay, at its peak conditions, right, which is it being at its tops right now, okay? So this is our strategy, right? We would actually short the bounces if it gaps down after missing earnings. Okay, so let me recap that real quick. If it gaps up after beating earnings tomorrow, we want to short the bounce there, all right, because we don't believe that it's possible for the stock to keep inflating, being that it's in such a weak sector, and the fact that it's like many other stocks like Tesla and all these other stocks that, when they're at their all-time highs and they have good earnings, okay, sure that it might have a good positive initial reaction, but after that it deflates because it was already expected, it already ran up into earnings. Second scenario, if it gaps down after missing earnings at these all-time high levels, we definitely want to short the bounces there, because we know if you're missing your earnings at your all-time highs, you're definitely not going to recover from that, okay? Now, the two scenarios you actually probably don't want to trade at all is if it happens to gap up tomorrow after missing its earnings, okay? You don't want to trade that at all. It's just too unpredictable. We've seen through the charts and the reactions here that when things don't add up, right, like it goes up after missing earnings, it's just, you don't want to mess with it. There's no definitive conclusion there, okay? And lastly, if it gaps down after beating earnings, I also don't want to trade that at all. Now, we can come to a conclusion here that your most likely outcome would be that it would actually recover those gains or those losses from gapping down because it beat its earnings. But this happened last week with ISRG where it gapped down significantly, but it actually recovered all those losses. So I'll show you that right here. Okay, so that would be probably the most likely outcome based on what we've seen from stocks lately and this earnings season. But at the same time, I don't have enough cases that would make me confident to actually buy calls on a gap down after beating earnings. Okay, so you could do that. Just understand that it's not a definitive conclusion, and you don't know necessarily how probable are you to win that trade. So I'm going to stay away from that scenario as well. So clearly, if you know the average range for the day post earnings is only 15 points, you don't want to be going, 20 strike puts out of the money, right? So obviously, select your strike wisely. You're going to want to go close to the money, or even if you wanted to, you could go in the money, okay? But these are the most likely outcomes, and I think we can definitely put together a great trade if we trigger these two criteria that we've put together, right? Obviously, if we get these two criteria, we want to leave the trade alone completely, and just take another trade for the day, okay? But these are the two most probable win rate outcomes that we definitely want to take advantage of if either of these two occur tomorrow. Okay, so guys, that's the plan for tomorrow. Let me know if you've got any questions. If you think I'm forgetting something, right? Maybe I'm forgetting a point that I should be paying more attention to, but I think our conclusion is pretty spot on, especially considering where XLU is and how much of a tear both of these have been on. And it's just classic, right? It's classic reaction that we had last earnings season with even Shopify, Amazon, Tesla, right? They were so high, they were so inflated that even after those good earnings release, it's just not enough to push them higher at that point. Okay, so they might have an initial bounce, but then usually you have a lot of points on the downside after. Okay, so this is our conclusion for tomorrow. I hope you enjoyed it. Guys, if you appreciate all the work and effort that goes into these videos, make sure you drop a like on it, and then obviously subscribe and turn your notification bell on so you don't miss out on the next trading idea and video that's going to be made to help you. Okay, so guys, this is a longer video. Usually, I like to keep things very short and concise, but at the same time, this is a very tricky stock, and I want to make sure that you know exactly what to do tomorrow, no matter what the outcome. That's why I gave you all the different scenarios and what you should do for each. Okay, so obviously, make sure you take the trade based on your own, confidence and what you think is going to happen. And then remember that nothing is ever guaranteed. Okay, so when a trade goes against you, how do you react? All right, that's up to you. And obviously, I'm not going to be able to help you with that. But what I can help you with is coming up with these high probability scenarios that are going to help you increase your chances to win, to make money. And with that being said, I hope you found this video useful, guys. Like I said, drop a like if you haven't, and then make sure you subscribe so you don't miss out on the next video that is going to be made to help you in your trading, guys. I'm Alex, the day trading champ, and I'll see you guys on the next video.